Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Monday, the 4th of May, 2026. May the 4th be with you. We are navigating a number of headlines ahead of today's U.S. session, including ongoing volatility in the Middle East, suspected intervention from the Bank of Japan and Japanese authorities, as well as an upcoming central bank meeting that could lead to some volatility overnight. Let's get into everything that you need to know ahead of today's U.S. session. So the big area of focus, as it has been for months now, is the conflict in Iran. Over the weekend, President Trump announced a new plan called Project Freedom, ostensibly on humanitarian grounds to help guide ships out of the Strait of Hormuz. Obviously, the humanitarian stuff is important, but this is seen as an effort to sort of get around Iran's blockade. Iran has responded now by striking at one U.S. ship and using drones to attack a ship in the UAE. And this has raised concerns that the fragile ceasefire between Iran and its enemies may be starting to break. This will be a very key situation to watch as we move through the rest of this week. But broadly speaking, markets remain relatively sanguine. We do see oil prices edging a bit higher here. Major stock markets are near flat, and the US dollar is just edging higher with a bit of a safe haven bid. Nonetheless, if we start to see more missiles flying, reports of ships sunk, any sort of escalation in the rhetoric, that's where these moves could really exaggerate as we move through the week. In other news, it appears likely that the Bank of Japan and Ministry of Finance have coordinated to yet again intervene to try to support the yen. It seems like every time the yen bumps up a couple hundred pips, that's where we see it get smacked right back down. This is something that is not going to be sustained for a very long time, but Japanese authorities are hoping they can at least take some of the speculative bids out of selling the yen. We'll continue to watch that situation as we move through this week as well. And then looking ahead, there's not much in the way of economic data during today's U.S. session, but we do have a Reserve Bank of Australia meeting tonight for me here in the U.S. In tomorrow's Asian session, the RBA is expected to raise interest rates about 75 to 80% discounted to do so. That could lead to volatility in the Aussie, which takes us to today's chart of the day is the Australian dollar versus the US dollar. Here on a 4-hour chart, we can see a pretty well-established range between about 71.15 and 72.15. So that 100 pip range here has contained prices for the Aussie dollar for going on a month now. However, we do see a rising bullish trend line. We see some of the moving averages, in this case, the 100 period and 200 period moving averages starting to inflect higher. So you can see that there's a clear bid behind the Australian dollar. And if the RBA confirms that by raising interest rates and perhaps suggesting there could be more interest rate hikes to come, that's where we could get a meaningful breakout in the Australian dollar. And if we get above that 72.15 level, a quick move up towards 73 or perhaps even 74 could be in play, given the prolonged tight consolidation range. Remember, markets tend to move in cycles. Volatility itself is cyclical. So after a period of low volatility, such as we've seen of late here in the Aussie, we could be entering a period of high volatility if the fundamentals and technicals align. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor before you go, please do just drop a like on this video. It's a great free way to show your support that really helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com. Thanks again, and best of luck with your trades this week.